Hello, Derby Public Library. We're here to talk about how the Weiss Financial Ratings database can help you protect your piggy bank. Weiss Financial Ratings is brought to you by Weiss Ratings and Gray House Publishing, and we publish financial strength and investment ratings that are independent, unbiased, and accurate to help you protect your piggy bank. As a library card holder at Derby Public Library, you'll have access to all of the materials that we'll discuss in this presentation. You can visit the library to log in to the Weiss Financial Ratings database, or you can connect to the database from home with your library card. Here's how the Weiss Financial Ratings database can help you. We are here to help you navigate your finances. We can direct you towards financially secure banks, credit unions, and insurance companies, help you find the best performing investments, and show you the stocks or mutual funds that should be avoided. And we'll give you personal finance how-to guides to help you get started in the right direction. Now, we have two types of ratings. The first is financial strength and safety ratings, and these are for banks, credit unions, and insurance companies. Now, our ratings follow a report card style grading mechanism, just like back in elementary school, where A is excellent, C is fair, and E is very weak. We also have buy, hold, sell investment ratings for stocks, mutual funds, and exchange-traded funds. And in this case, we use the same grading mechanism of A through E, and A's and B's stocks are graded as a buy. C stocks are graded as a hold, which means if you have them in your portfolio, hang on to them. But stocks rated as a D or an E are listed as a sell. So those might be investments that you want to not hold on to for very much longer. So for banks and credit unions, we can help you find the financial strength of that institution to locate the most financially secure banks or credit unions in your area and avoid the hassle of dealing with a failing bank or credit union and make sure your money is safe. We'll help you find the financial strength of your insurance companies to locate the most financially secure insurance companies for your specific needs, whether it's homeowners insurance, an auto policy, or maybe long-term care insurance. And we'll make sure your insurance company will be there for you when you need them years down the road. You'll find buy, hold, sell investment ratings for 11,000 stocks traded in the United States. Now, right now, only 1,100 stocks make our grading for a buy. You can locate stocks by rating, industry, total return, and more. And we'll help you find safer stock investments and show you which ones to avoid. You'll have access to buy, hold, sell investment ratings for 26,000 mutual funds and 2,100 exchange-traded funds. Now, right now, only 4,800 out of that 26,000 mutual funds make our grade for a buy rating. You can locate funds by rating, minimum initial investment, fund family, and more. And we'll help you find the best performing mutual funds to maximize your retirement savings. You'll also find personal finance how-to guides that are designed to help you get started on your financial future. We discuss a wide range of personal finance, insurance-related, and investing topics and highlight the questions you might not have thought to ask. And for those of you who are turning 65 or are already on Medicare, we offer a buyer's guide for Medicare supplement insurance. We'll walk you through the Medicare supplement insurance decision-making process, describe all the Medigap plans from A through N in detail, help you pick the right plan for your unique healthcare needs, and give you the price that each insurer will charge so you can get the most coverage at the best price for your budget. So let's get started. In order to log into the Weiss Financial Ratings database, you'll want to visit the Derby Public Library website, click on Online Resources, and then select Online Databases. Scroll down to find the Financial Ratings Series or Weiss Ratings, and then you can log in at the library or from home with your library card. So once you're logged into the database, there are 3 ways to search. If you know what you're searching for, you can start typing in the search bar at the top of the screen. Or if you want to search by topic, you can select the icon on the screen or in the gray bar. Then you can start a quick search or build a screener. For banks, you can build a quick search by searching for company name by rating or by ratings change or headquarters state, or you can build a screener that gives you the flexibility to search for criteria that are most important to you. You can do the same for insurance to log in and do a quick search, or you can build a screener. If you're searching for stocks, you can do a quick search and search by company name, by rating, by sector, or by industry. Or you can build a screener to locate stocks with criteria that are most important to you. You can do the same for mutual funds. Now, if you're looking for personal finance how-to guides, you would click on the Financial Literacy Tools tab and then click on one of those options, whether Financial Literacy Basics or Financial Literacy Planning for the Future. And this is a summary of those financial literacy tools that are available to you. Our consumer guides provide helpful guidance about many insurance-related topics, like homeowners insurance, auto insurance, health savings account, Medicare prescription drug coverage, and more. Financial Literacy Basics is designed for people who are just getting started. So we'll talk about how to manage debt, how to make and stick to a budget, understanding the cost of college, health insurance, checking accounts, and more. In Financial Literacy Planning for the Future, you can learn about living together, getting married, and starting a family, and how finances are involved in all of those, saving for your child's education, insurance strategies and estate planning, buying a home, starting a career, and more. And how to become an investor, where we'll talk about what is investing, what type of investor are you, how to read investment charts and analysis, brokerage firms and financial advisors, and more. So for those interested in Medicare supplement insurance, we have a tab called Medigap that will allow a user to generate their own custom report with pricing and options for their own personal circumstances. So to generate your own Medigap report, you would click on the Medigap tab, enter your name, your email, your age, your gender, and your zip code, and you'll get a customized Medicare supplement insurance planner and pricing guide built just for you. Now, Medicare does not cover all of the costs associated with hospital and medical insurance. You can fill the gap with a Medicare Advantage plan or a Medicare supplement insurance policy. Now, here are some differences between Medigap and Medicare Advantage. Now, with Medigap, also called Medicare Supplement Insurance, there are higher premiums, but there are no copays. You have the freedom to choose your doctor, and no referrals are necessary. But some routine services like vision and hearing are not covered. But you're covered everywhere in the United States, and 6 plans offer coverage abroad. With Medicare Advantage, you generally have lower premiums, but you do have copays to pay. You might be restricted to a network. You might need referrals for specialists, but with Medicare Advantage, you can have extra benefits like vision, hearing, and fitness, sometimes dental. But if you're outside of your service area, you're limited to emergency services only. Now, there are a couple of secrets that we'll discuss in this video about Medicare supplement insurance. The first secret is Medigap plans offer identical coverage. For every lettered plan, A through N, every insurer that offers that plan provides the same exact benefits. The plans are regulated by the government, so the coverage within each lettered plan is the same, regardless of which insurer you choose. Now, this is a summary of all of the 10 plans and what they cover. Now, we don't have to go into these in detail right now, But if you generate your own Medicare supplement insurance report, you'll have all of this information and a lot of detail to go along with it. But you can see that the rates vary depending on which plan you choose. So here's secret number 2. The Medigap plans are standard, but the rates are not. Insurance premiums can vary by thousands of dollars per year for the same exact coverage, and you can potentially save thousands just by shopping around. Here's an example for a 65-year-old woman living in Derby, Connecticut. Now, if she was interested in Plan G, the highest premium that an insurer can charge who offer coverage in Derby is $7,185 a year. The lowest premium also for Plan G, which means it's the same exact coverage, is $2,492, which is a savings of $4,695 per year just by switching insurer. And the coverage is exactly the same because both of these plans are Plan G. Now here's another example of a 68-year-old male living in Derby. Now Plan A, which has the least amount of coverage, if we go back to our grid of all of the coverage areas in each plan, the highest premium is $16,082 a year. And again, Plan A has the least amount of coverage. Let's look at that again. Okay, here we are with our Medicare supplement insurance summary. Now, Plan A here only has 4 different checkoff boxes. So that means that Plan A covers your Medicare Part A coinsurance and hospital costs, your Part B coinsurance or copayment, first 3 pints of blood, and hospice care coinsurance or copayment. Now, if we look at Plans F or Plans G, these have the most coverage because they have the most checkoff boxes. So let's go back to our pricing. So we can see that this 65-year-old female would, for the lowest premium, pay $2,400 a year for Plan G and get the most comprehensive coverage. But this 68-year-old male would pay just a couple $100 less for Plan A, which has the least amount of coverage. However, if someone is interested in Plan A, they can save $13,000 a year by going with this insurer versus this insurer and get the exact same coverage. Because again, the coverage is regulated by the government, but the pricing is not. So the insurance company can charge whatever they want for the same exact benefits. So here's an example for a couple living in Derby. If they went both with Plan G, the highest possible premium they would pay is $14,370 a year compared to Plan G, also with a different insurer, $4,984 a year, which is a savings of $9,386 for the exact same coverage, for the exact same benefits. It just costs less if you went with the insurer offering this particular premium. So there's a lot to be saved here, and this Medicare Supplement Insurance Buyer's Guide that you can download yourself and compare all of these prices for your specific circumstances can potentially save you thousands of dollars a year. Now here we go with secret number 3, that safer insurers are not necessarily the most expensive, and higher premiums don't mean you're getting coverage from a stronger, more financially stable insurance provider. And secret number 4 is that you can make the choice. You can get more coverage for less, reduce your premium, and balance the financial safety of your insurer with your choice of plan. So here's how to log in, and we're going to log in together right now and take just a quick look through the database. So we're going to visit the Derby Public Library website. We're going to click on Online Resources and then select Online Databases. Scroll down to Financial Rating Series or Weiss Ratings, and you can log in at the library or from home with your library card. So let's give it a whirl. I'm going to go to Derby Public Library. And I'm going to click on Online Resources and then select Online Databases. And we're going to take a look for Weiss Ratings, which is right here at the top of the list. And that will log you into the database. Now, if you're logging in from home, you may need to log in with your library card by clicking the link right here. So here's an example of the ratings that are displayed by category. So we have stocks, mutual funds, and exchange traded funds. So now again, if you know what you're searching for, you can search for anything in the top bar and then navigate to any type of investment, bank or credit union or insurance company right from the search bar at the top. But if you're interested in searching for stocks, for instance, you can click on the Stocks tab and then start a quick search or build a screener. Or if you're only looking for buy-rated stocks, you can click on this Buy button and it will give you a list of those 1,100. But let's build a screener just for fun. So let's add some criteria. Now I'm going to start with rating because I want to look at only stocks that are rated in our buy category. So that's A+ through B-. Now say you want to also look for stocks by industry, and maybe you're interested in pharmaceutical stocks right now. So by adding criteria to this list, this list of stocks will either grow or get smaller based on the matches to your criteria that you add in this list. And let's also add in price, total return, and then let's take a look at maybe a 6-month return. Now here, any numeric value can be sorted. So let's sort this descending. So BioNTech, its total 6-month return is 229%. So let's take a look at this particular stock. Now, our stock information is designed to be informational to both the beginning investor and more information for the more seasoned investor. So here you can see how its price has gone up. You can look at ratings factors like reward and risk. It has an A- or excellent reward. Its risk is C, which is fair, which is still pretty decent. And then you can read about ratings factors like growth, efficiency, solvency, total return, and more. Now, if you were interested in kind of digging into the data further, you can look at key statistics that compare this stock to stocks in other stocks in the industry. You can look at a technical chart, or, for those of you who are beginners, you might want to look at just the buy rating, what the stock is trading at right now. This is $343.10. This will change during a trading day. So you'll see this, this stock price change as prices go up and down. And you can look at their returns over time, their valuation, and a whole bunch of information. Now, if you were interested in mutual funds, you can click on the Mutual Funds tab, and let's go ahead and build a screener for mutual funds too. Now, if you wanted to start a screener with just a buy-rated fund, you can click on the buy-rated button and you'll see that the rating is already populated. So I want to add a criteria for if this is in fund information, minimum initial investment. And then I'm going to add a criteria for, let's look at total return over 1 year. So for minimum initial investment, all of the funds that we rate go from $0 initial to $5 billion initial. And I don't know about you, Derby Public Library patrons out there, but I don't have $5 billion to invest. So we can change this number to say, give me funds that range from $0 to $1,000 in minimum initial investment. And then I want to go ahead and sort this by total return. And you can see that this Morgan Stanley Institutional Fund Inception Portfolio Class A has the highest one-year total return, but its minimum initial investment is $1,000. Now, if I was looking for something with a lower rate, this Lord Abbott Micro Cap Growth Fund F has 115% total return over the course of a year. So let's take a look at that one. Okay, now this is asking me, do I want to leave? And if you wanted to save this screener to your own profile so that you don't have to build it every time you visit the site, you can do that. You can click this save button, create a personal account, and then you can save that screener and not have to build it the next time. But I'm going to go ahead and let's take a look at that particular mutual fund. Okay, so here's my Lord Abbott Microcap Fund. And let's see, its reward is listed as a B+, which is good. Risk is C, which is fair. That's typical of mutual funds. And you can see that it is a general rating of B and a buy rated fund. You can see its net asset value over time, and then its total returns. You'll see fund information and its top holdings, a whole bunch of information. And again, if you're interested in looking deeper into the fund, you can look at their NAV history. And what's really cool for both stocks, mutual funds, and other types of investments, we have a comparison tool so that you can compare investments side by side and see how they stack up one-to-one, putting all the numbers side by side. You can do up to 4 at any given time. So let's take a look at banks. We'll jump over to banks, and I want to go ahead and let's build a screener for banks. Now you might ask yourself, why is it important to look at the financial strength of a bank? Well, it'd be important, like say if we look back to the mortgage crisis of 2008, 2009, there were 300 banks that failed after that period. So if you look at the financial strength of your bank, and maybe you want to do that once a year, then you can see, well, how does my bank stack up to others? Is it financially stable? If there is, an upturn or a downturn in the economy, are they going to be okay as much as some of the other banks in my area? And if a bank fails, and of course, you're insured by the FDIC up to a certain amount of money, so you'll get that money back, but it might take, 30 days, 60 days to get access to your checking account. So, if that's something that you want to protect yourself against, then you can look at the financial strength of your bank. So I'm going to add an additional criteria of states with branches, and let's choose Connecticut. So there are 26 banks who are rated A+ through B- who operate in the state of Connecticut. So let's take a look at Bessemer Trust, who has an A rating. You can also sort this. Oops. And you can see that Stafford Savings Bank in Stafford Springs and Bessemer Trust and Chelsea Groton are all three have an A rating. So let's take a look at Stafford. So here you'll be able to see kind of how we generate this A rating. Their capitalization is excellent, their asset quality is excellent, profitability is excellent, liquidity is excellent, stability is also excellent. So excellence all the way across the board, and that's an A-rated bank. You can see who they're affiliated with, if there are any. You can look at their ratings history over time. They were listed as a C+ in Q4 of 2016, but their ratios have improved so much so over the course of the last couple of years that they now have an A rating. You can compare this bank to others. So if we wanted to say, compare this to Bessemer Trust, then you can see and compare those two banks side by side. Now, if you aren't really sure about a particular term within any of the any parts of this site, you can click on the glossary tab and then learn about what these individual either indices or terms mean just by clicking on the glossary tab. So let's hop over to insurance. And let's go ahead and build a screener for insurance. And I'm going to start by adding a rating category. And then let's add a criteria for licensed in, which will let me choose Connecticut and give me all the insurance companies that are licensed to do business in the state of Connecticut. And if we choose insurance type, then you can pick which kind of insurance company you might be looking for. And if we choose homeowners insurance and then move this slider over to the A plus through the B minus, which are our most highly recommended companies, you'll see that there are 139 companies licensed to sell homeowners insurance in the state of Connecticut. You can move this slider over a little more and you can see that there are 2 rated B plus, which is the highest rating of any of those Connecticut insurers and Travelers and USAA General. So if you click on one of those insurance companies, you can learn a little bit more about them. They're recommended, so B plus. Their capitalization is excellent. Their reserve adequacy is excellent. Profitability, liquidity, stability, and you can read a little bit more about what these factors mean. And for the most part, and for the general insurance consumer, you might not need to know some of this information apart from their recommended rating as being a very financially secure insurance company. And the thing about homeowners insurance policies is you might be paying into that policy for 20 years, 30 years, or more, depending on the life of your mortgage or how long you're in that home. So you want to make sure that your insurance company is going to be there for you, 10, 15 years down the road. Okay, so let's turn to the Medigap insurance. For those of you who are turning 65 or already on a Medicare supplement insurance policy, here is where you can generate your own customized report. Now, what you can do here is you can enter your name, or say you didn't want to enter your name and you wanted to put in a nickname or maybe your initials or what have you. If you want to receive a copy of the report emailed to you, you can enter your email here. If you don't want to enter your email, you can put ignore@greyhouse.com, and then you would enter your age, your gender, and your zip code, and then click Get Report. And I have a couple of reports already generated. So let's scroll to the beginning. And this is a sample of the report. And you'll be able to, just by paging through, look at some of the key decisions that you might want to make when you're deciding which Medicare supplement insurance policy you might want to go with, or if it makes sense to you. So decision number 1 might be, should I seek to get better health insurance coverage than Medicare alone can give me? Question number 2 is, how should I cover that gap between my medical bills and what Medicare pays? Decision 3 is, which Medigap plan should I choose? And decision 4 is, which insurance company should I buy my Medigap plan from? And this report will help you make these answer these questions. So the first part, talks about what Medicare covers so that you can get a sense of what your healthcare costs might be once you are on Medicare without Medicare supplement insurance. So for a hospital care, inpatient care, Medicare pays all but $1,484. You pay that $1,484. So if you have a hospital stay, that's what you can expect to pay if you don't have Medicare supplement insurance. And this list goes on and on and on for a whole bunch of different categories. So here is question number 2. Which Medigap plan should you choose? And there are 10, A through N. And this chart goes into just a summary of what each of those plans cover. So Plan A, which has the bare bones coverage for a supplement plan, covers your Part A coinsurance, your Part B coinsurance, first 3 pints of blood, and Part A hospice care. Now, Plans F and Plans G have the most coverage, but we should note that Plan F and Plan C were discontinued as of January 1st, 2020. Now, if you were eligible for Medicare prior to January 1st, 2020, you're still eligible for Plan C or Plan F, which is why we include them in this report. But if you were not eligible for Medicare until after January 1st, 2020, then you can choose Plan D, which has the same coverage as Plan C, except for this Part B deductible. And then you could choose Plan G, which has the same coverage as Plan F without this Part B deductible. That only means that you pay the Part B deductible, which is somewhere around $180 out of pocket instead of having the insurance company pay it for you. So that leads us to our next question is which insurance company should you choose? Now remember that within each plan, like A or Plan F or Plan G, all of the benefits and the coverage are exactly the same regardless of which insurance company you choose. So let's compare them. Now this report gives you a rate comparison for every single plan. So say you might be interested in Plan A. And let's look at Plan A, and this is a narrative about what it covers. And then these are the companies that offer coverage in your zip code for a 65-year-old female, which is the report that we're looking for. And then we can look at these individual rates. Now, these are organized by our financial safety or financial strength rating. So these insurance companies have a financial strength rating of B- or higher. These have a C rating, and Colonial Penn Life has a D+. Now, strangely, Colonial Penn also has the most expensive coverage, and this is for Plan A, which has the least amount of coverage, and they want to charge you $16,000 a year. Compared to United Healthcare, and this is an AARP plan, that's what those 2 asterisks mean, will cost you $2,200 a year for the same exact coverage. No difference between United Healthcare Plan A and Colonial Penn Plan A, except this one costs $14,000 more, which is outrageous. So let's take a look at Plan G, which is the most comprehensive of the plans. And then let's see who provides that Plan G coverage in your zip code. Okay, so we have a number of plans who are B rated or higher, a number that are in C, and again, Colonial Penn with the D+. And now Plans F and Plans G are the most popular plans because they have the most coverage. Now, Plan A is one of the least popular plans just because it doesn't cover all that much. And strangely, Colonial Penn, their $16,000 plan for Plan A, this Plan G is, $6,000 less and for more coverage, which is odd. But let's take a look at the price comparison. So United Healthcare or Anthem Health Plan has Plan G coverage of $24.90 something per year. So, you might want to choose, if you're interested in Plan G and just turning 65, those plans versus Colonial Penn at $7,000, or maybe combined insurance at $4,000. Now, all of these insurers provide the same exact benefits. There's no difference for the coverage. The only difference is one costs much more and one costs much less. So with this report at your disposal, and you can download it for free at the library, then you can have all of this pricing for your particular circumstances and find out how to get the best rate for the coverage that you want. Now, if you're interested in learning about financial literacy, you can click on the financial literacy tools and then open up our insurance consumer guides or maybe financial literacy basics. And then you can download these short reports on the topic of your choice. If you're interested in starting a 401k or getting more information about health insurance, or maybe you're interested in buying a car and getting auto insurance for that vehicle. So we provide a number of tools to kind of help you get started in the right financial direction. So let's review again how to log in. So you're going to visit the Derby Public Library website, click on Online Resources, and then select Online Databases. You'll scroll down to the Financial Rating Series Weiss Ratings database, and you can log in at the library or from home with your library card. So I hope this was helpful, and thank you so much for bearing with us through the whole video, and have fun searching in the Weiss Financial Ratings database so that you can start protecting your piggy bank.